How are we getting on, people? Luke here from LAGFX. I am back today with another Sunday Sessions video. If you are new to this series, it's where me and James go through a few markets that we feel are holding a good probability of placeable, profitable positions. So what we are going to do is run through a few pairs that we have analysed, giving you zones and areas to look out for that you can then use and apply to your own analysis and hopefully profit alongside the LAGFX team. As you can see on screen today, I am starting with the Euro US dollar pair. What I want to do is quickly highlight a trade that we placed Thursday of last week. As we can see here, we had a stop loss of 14 pips and a take profit of 163 pips. This offered us with the risk to reward ratio of a 1 to 11. If you are risking 2% of your equity like I am, this could have generated you with a 22% return. Now what I'm going to do is throw a few screenshots up on screen of the analysis that I provided to my VIP clients from start to finish, and also quickly run through how I went about placing this position. So from the offset, we needed to distinguish whether this market was bearish dominant or bullish dominant. If you are familiar with the Euro US dollar pair, you'll know that it is bearish dominant, so we want to be selling into this market. What I waited for was a penetration of my higher time frame point of interest, and then waited for the deliverance of bearish structure being put in. That would then instigate and suggest that price was ready to take its next impulsive bearish wave. We were delivered with exactly that. We had brilliant rejection from this penetration here. We then had a quick correctional wave. As soon as that corrective wave was put in, we waited for a break of structure to the downside, again suggesting that the next impulsive wave was ready to take place. As soon as we were delivered that with this here, as you can see, a break of structure, we had a lower low created after previous higher lows. I then entered into my position. So we waited for that lower low to create, then we waited for a lower high to be created, followed with another lower low, and I got involved on the following lower high. I set my stop loss just above that structural high, and then my take profit at a swing low down here. And as you can see, this trade took profit within the day. Now moving forward, how can we look to get reintroduced into this market? Well, I still believe we have got bearishness to go and that this impulsive wave is still in play. So what I'm looking to do is get involved in the next pullback, which I believe will be here. This is going to be an area that we can look to place those sell positions. I have highlighted a last buy to sell candle. So this is holding a lot of supply in my belief, and I want to see price trailers into this, give us the rejection we need, and then we can look to get introduced. So just using my path tool, I want to see price penetrate into this zone. Then I want to see a fractal break of structure like this, and then we will look to get introduced here on the next lower high, where we can then continue to ride price lower. So as you can see, this is how I want this market to pay out, for price to push up into the zone, deliver us with the break of structure we need, and then get in on the next lower high. Now what I'm going to do is highlight this zone for you guys so you can highlight it yourself and implement it into your own analysis. So if you want to make note of this zone yourself, then please do so. Pause the video and put this in on your charts. Now, as I said, I will be looking to place those sell positions, so I'll have my stop loss set above the structural highs that I created, and then my take profit at a swing low. So our trade will look something like this. Now moving over to the Euro AUD pair, we have seen a penetration into a point of interest. We took advantage of some temporary sell positions here, but then we saw price actually trail higher, creating a new higher high. We have now seen price actually tap into a further point of interest that I have highlighted. And what I'm wanting to see now is some rejection from this and start producing that bearishness. We have seen more and more supply getting built up, and this could be seen as a distribution. So price is preparing for that next impulsive wave taking us lower. So again, what we need to do is go down to the lower time frames, like so. Wait for a fractal break of structure, which could be seen here. Once we have that, we'll want to see price come down, trail us back up into a fractal POI, where we can then look to actually execute those positions. So let's wait for price to break structure to the downside, so for price to penetrate through this, then trail us back, where we can then look to get a refined entry. But again, I am looking to sell into this market this coming week and take advantage of that next higher time frame impulsive wave. So again, our entry would look something like this, and this is exactly how I want price to play out. Okay, so now moving over to the Great British Pound AUD pair. Again, we have had this higher time frame correctional wave being put in. We've had the penetration of our zone. Now we need to look for valid areas that we can look to get reintroduced. So we could say that this last buy to sell candle here is holding a potential area that we can look to sell from. But if we are delivered with a continuation in bearish structure, then we could probably look to place sell positions from the rejection here. So what I'm going to do is actually highlight this area here as a potential for a trail back into this zone. So again, I'm going to highlight this zone for you. Take note of these figures and put them in on your own charts. So as you can see on screen here now, we can see these last buy to sells, which are obviously holding plenty of supply, which is going to encourage price to take a move lower. If, however, we already have enough supply, the supply and demand balance is in favor of supply, then we could see price continue bearish from this pullback here. If that was the case, we want a break of structure to take place from these lows, price to then trail back into this last buy to sell zone where we would then look to get introduced. So what I'm going to do is draw some paths out, show you the two potential ways that price could play out moving forward and where I'd look to execute. So as we can see on screen, these are the two potential outcomes that I believe price is going to portray. We just need to wait and see what happens. So again, we have our entries here for our sell positions, our stop loss above the structural highs that will be created on the pullbacks on both of these, and they are generating us with some brilliant risk to reward returns. So again, highlight this zone, wait for the breaks of structure that we need to see in order to give us the confluence and confirmation to execute, and then place those sell positions. Okay, now I'm finally moving over to the XAU USD pair. You can see that we've actually rinsed this market very well. We have profited amazingly from this bearish impulse, taken full advantage of these swing lows. What we are seeing now is actually bullishness being reintroduced. So we've actually had a break of structure here. But if we want to continue looking for potential buy positions, we would want to see a break of structure here as well, just for me to have that confirmation and confidence that price is going to continue putting in that bullishness for this higher time frame correctional wave. Now, what I can expect is for price to actually trail us down into this zone, this last sell to buy zone, before setting its next fractal impulsive wave higher. We have seen price tap into this last buy to sell zone. So if we see price fall, penetrate through this and continuing to produce structure below this zone, then I am led to believe that the correctional wave was only fractal and we are still in this bearish impulsive higher time frame wave. So again, what I'm going to do is highlight this zone for you all as a potential area to buy into, presuming we have the confluence and confirmation to execute those buy positions. So again, in order to look for these buy positions, I want to see price drive us into this zone, produce us with a fractal BOS to the upside, and then we can look to execute our buys, taking us higher into this market. So that is going to conclude my analysis for this week's Sunday Sessions video. I hope you guys have enjoyed. If you have done, please leave a like on this video. What I'm going to do now is pass you over to James. He is going to run through some of the pairs he is looking at and give you his rundown on the markets as well. Now, just before I let you go, I just want to let you all know that we are going to have someone featured in next week's Sunday Sessions video. He is a special guest, so be sure to check out next week's Sunday Sessions video, as that one is going to be a good one. Now, without further ado, I'll pass you over to James.
So firstly, thank you to Luke for sharing that analysis with us all. I'm sure those positions are going to be very, very profitable this week, and I hope you've all been able to take away a lot of information from that in terms of how you're going to come and tackle the markets in this coming week itself. So I'm going to do the same thing here and just run through a couple markets, more specifically the select few markets that I trade. I'm actually quite narrow in terms of the different markets that I trade. It's typically going to be the Euro US dollar and the US dollar yen on a regular basis, and every now and then I may deviate away to different markets, but you should definitely get used to seeing me mainly just analyzing these, trading these, updating these, so on and so forth. So starting off on Euro US dollar, as I usually do. Now, I have discussed my slightly higher time frame bias on this for a long time. I'm just going to recap it again so we understand how I've gained this story and what it is I'm looking for in this market. So obviously on a 3-month time frame, we are seeing bullish structure, so we can assume that bullishness will continue. In order for bullishness to continue, price should have to trade into this demand zone before reversing and making the next impulsive wave higher. Now, if we go slightly shorter term, we see that obviously we've been trading down bearish towards this region for some time now, this being the most recent impulse in terms of 4-hourly structure. And we can see that we've had a correctional wave formed to trade us up, which I believed had the purpose of trading us up towards one of these points of interest. Now, we can see by the wicks that we had a very small buy to sell here, which pushed price down to break structure. We had some market inefficiency after the creation, so that was a very nice zone. Price slightly liquidated that, and therefore my bias was for price to come up, trade into this last buy to sell region before then reversing and making that next move lower. As a result of that bias, and as a result of the fact that yes, price did technically reverse here, but did not do so in correspondence to a supply zone, I didn't believe that price was yet ready to create the new impulsive wave lower. Therefore, if you remember last week, I was taking this, so A to B, as a bullish impulse, and I had these 3 demand zones marked out as areas that price should react to before making a move higher, which I believed was going to be a move higher into this zone before reversing going lower. But as of Friday last week, we had the NFP fundamental release, which brought enough volatility into the markets to actually push price through, breaking structure to the downside and invalidating my old bias. We can see we still had some slight reactions from these zones where partial opportunities could have been attained. So we still could have been somewhat profitable from my bias and from these moves. We can see obviously the demand zones were relevant because each time we had a demand zone here, there was a reaction. So there was definitely an order remaining in those regions that needed to be mitigated. It's just a shame because not enough demand was obviously introduced from the zone taps. So now moving forward, we can assume that we're going to have an S&D flip. So rather than looking at demand, we're now going to start looking at supply. So after this break of structure, the first thing I did was identify these different zones in the market, which should represent unmitigated orders. We can now expect that price will reverse and retrace back up into one of these before continuing lower. Now it seems that just before market close, we could argue that price has tapped into this overall buy to sell region, and therefore that is a reaction to a supply zone. We can see throughout this move lower, we have had a few reactions to supply zones as well. So in the shorter term, supply is definitely taken control. But for us to confirm that longer term, price is definitely reacting to supply and definitely ready to make that move lower, we'd need to see a reaction to one of these. Now, the reason why is because we're still just following the fractalization of this, and these zone taps are within the fractal nature of this structure. To put that into perspective, we're seeing impulse, correction, impulse, correction, impulse. Now, in order for us to know longer term that supply is in control, we'd need to see price break the fractal structure, so breaking the protected high of fractal structure, then coming to reverse and react to one of these zones, which would tell us longer term that supply is in control and is exactly what we need to confirm to us that this move lower is the new impulsive wave. So just to round that up, the bias is going to be, we see price at some point eventually retrace back up into one of these two zones. We see a reaction and reversal from those zones, and then price should then make its move lower to at least exceed this final target. But longer term, we're hoping to see price come and tap into this demand zone before accumulating longer term and getting ready to make that higher time frame new impulse. Okay, so with the US dollar yen, it's kind of hard to decide exactly what it is doing. Now, this could potentially just be a reaccumulation. You know, obviously we were trading bullish for a very long time until eventually we had a early break of structure backed by the fact that we then traded back up and reacted to supply, where we had a very nice confirmed entry from that supply zone. We then moved lower, created a new lower low. So I assumed that price would want to continue doing that, trade back up, react to supply, continue lower. But as we see, price has now emerged from that, broken what should have been a protected high, therefore delivering a break of structure now to the upside. So what it seems like, and because of the fact that price has now come to liquidate the previous market high, it would appear that this was pretty much just a reaccumulation where we trade up into our buying climax, automatic reaction, secondary test, trade back down. We have that sign of strength which clears all liquidity in this region, therefore manipulating retail traders out of the market. We then come down, we have that creation of the spring, which is where we then liquidate all of the downside positions that people may be involved with. And then after that, we break back in, start moving higher. And therefore we can expect that this was a reaccumulation, and therefore the purpose of reaccumulations is to push price higher and introduce more demand to back that move. So therefore, taking this assumption, we should now see price make another nice bullish move higher in order to continue with this bias that we have created and confirmed with the creation of this reaccumulation. So what we do now is look inside of here for anywhere that price may need to trade back down to, where there may be a unmitigated position remaining. So I would argue here that we've already mitigated out that region from that tap. Okay, and here we could potentially argue now we have this last sell to buy. Does price tap into that? No, it does not. Therefore, we might make the assumption that this is a relevant zone and set our alert on that. So 144,196. Let's hope to see price traders back down, pull into that, where we can find entry confirmation, the reversal higher. If not, as price continues, there may be some new demand zones that it forms through the continuation higher, and we can look to identify those and get in on those positions. But the bottom line is, and to round up this bias as well, we're expecting price to make a new bullish move higher, taking the assumption that this reaccumulation had the purpose of introducing more demand to continue higher. Therefore, we can assume that the smart money operators or the composite man has the desire to push price higher in this market, hence the creation of the reaccumulation. And therefore, this is a great position to get involved in buys. Any form of Wyckoff schematic usually indicates a start of a trend. So obviously we did have an uptrend here, we did have a bullish trend, but the, I guess, backing power or simply just the demand in that move started to diminish. So we've ended that uptrend. We have broken structure, we have manipulated the market, and now we are creating a new uptrend. And therefore now is the best possible time to get involved in positions, because we've just introduced more demand into the market, which should mean that an uptrend will emerge in this market for some time to come. So I will be looking at demand zones to get involved from on this market in the coming week, and then recapping on Euro US dollar, looking for potential sell positions to trade down. So I hope you have enjoyed the outlooks that have been provided to you in this video. Make sure to let us know what your bias and outlook is, because it's always nice to have discussions about that and know what other people are looking at. So if you have enjoyed, make sure to let us know. Any feedback is highly appreciated, as it helps us with the algorithms massively. But without waffling on too long, thank you for watching, and we'll see you next Sunday in the next Sunday session.